For the longest time, owning an HDB flat in Singapore came with this little thought at the back of our mind that one day our block will kena SERS, because under SERS, or the Selective On Block Redevelopment Scheme, the government would buy back your aging flat, compensate you based on the market value, and even give you a brand new unit nearby, complete with a fresh 99-year lease. It was the second equivalence of HDB Toto, with the first being getting selected to choose your BTO flat, of course. But here's the thing, less than 5% of all HDB flats have ever been picked for SERS. And now, that era is officially over, as the government has confirmed that there are no longer any plans for SERS projects. In its place comes VERS, or the Voluntary Early Redevelopment Scheme. In this video, we will look at what VERS is, how it is likely to work, and how this will affect us moving forward. So why did the government remove SERS? Wasn't it a good policy? In a way, it was. SERS helped to rejuvenate older estates and gave homeowners a new lease of life. But here's a catch. It came at a very high cost. Under this policy, the government had to buy back every flat at market price. You get compensation, a new 99-year lease flat, and even a $30,000 rehousing grant on top of that. Also, even though it was compulsory, meaning you couldn't say no, but let's be honest, who would complain about getting a new flat and extra cash? But the truth is, SERS was never meant for every old estate. The S in SERS literally stands for selective, meaning it only applied to locations with strong redevelopment potential, usually in central or city fringe areas where the land could be redeveloped at higher density and value. For example, the Tanglin Hot Estate in Queenstown back in 2014, West Coast Road in 2016, and McPherson Lane in 2018. That was the beauty of SERS. With it, you could keep your neighborhood, your friends, your community, and sometimes even enjoy capital appreciation from your new flats. But as more estates aged, buying back and rebuilding entire towns started becoming too expensive and unsustainable. That's when the government introduced VERS during the 2018 National Day rally. So unlike SERS where everything was government-led, VERS puts the decision in residents' hands. When the precinct flats reach around 70 years old, residents will get a chance to vote on whether they want to sell the homes back to the government early or continue staying there. If the majority agrees, then ka-ching, the government will buy back the flats. But here's a big catch. The payouts will likely be lower than SERS since the flats are older and have fewer lease years left. The reasoning behind this is simple. The government doesn't want VERS to become another lottery effect like SERS once was. Because while SERS was great for homeowners who got it, it just wasn't realistic in the long run. If every generation expected the governments to buy back their flats at full market value, the cost would quickly grow, and future generations would be the ones to suffer. Besides that, another key difference was that SERS was selective and immediate, where the governments be like, yeah, your block got selected, now move. VERS is more gradual and long-term. Under VERS, the government plans to redevelop older HDB towns in a more orderly and sustainable way, spread out over 20 to 30 years, rather than rushing to replace everything at once. This ensures that renewal can happen precinct by precinct, while allowing infrastructure, transport, and amenities to evolve alongside new housing and keeping communities intact. But perhaps the biggest difference of them all is that VERS will have a much more broader reach. Instead of just the lucky few, VERS aims to eventually cover many more aging towns across Singapore. One thing that can really save you a lot of time and headache is using a mortgage broker, and one of them is cashew.sg. So instead of having to manually dig through different bank websites or spending hours calling hotlines just to ask for rates, with just a few inputs, Cashew helps you compare the best loan packages across multiple banks, all in one place. The best part? This service is completely free. There are no hidden charges or sneaky fees involved, because Cashew earns its commission from the banks, not from you. So you get all the benefits without paying a single cent. And if you ever have questions, their AI chatbot is surprisingly handy. Whether you want to chat for loan rates, understand the fine print, or just get a bit of refinancing advice, the chatbot is there to help. It's like having a friendly mortgage consultant on standby 24/7 without the awkward sales pressure. To top it all off, Cashew is currently offering exclusive cash rewards for my viewers. Depending on your loan amount, you can get anywhere from $100 to $3,500 back in cash when you refinance through them. So you are not just saving on interest, you are literally getting rewarded for it. Check out Cashier SG using my link down below to see how much you could save today. However, with that being said, there are still many questions that remain, with the first one being which precincts will actually be chosen. Right now, what we do know is that not every aging estate will qualify. The government has already said that VERS is offered to selected precincts when flats reach about 70 years of age. Though, ERA expects that the first few VERS projects will come from towns built in the 1970s and 1980s. Places like Queenstown, Bukit Merah, Toa Payoh, Ang Mo Kio, Bedok, Tampines and Yishun, as these are the estates that will start crossing the 70-year mark in the late 2030s. So if your flat sits in one of these older estates, then may God bless you, because you might just be among the first few to see how VERS plays out in real life. The second question is how much will the compensation be? As of now, there's no official formula yet, but analysts believe that it could be similar to how the lease buyback scheme works, which estimates the remaining lease value using the Ballas curve. Basically, the fewer the years remaining, the faster the value drops. So you wouldn't expect a huge payout, especially since these flats have less than 50 or 60 years of lease left. However, this is also where things might get tricky, because by that time, most homeowners will likely be in their 40s or 50s. Some may have even retired, with the loans fully paid off and perhaps living on CPF or savings. So on one hand, if payouts are too low, the seniors may struggle to afford another loan. But on the other hand, if payouts are too generous, the system might become financially unsustainable for future generations. The third big unknown is the voting threshold. Basically, how many residents will need to agree before a precinct can go through VERS. While nothing has been confirmed yet, many expect it to require around 75% approval, similar to private en bloc rules. However, getting this kind of consensus in a large HDB precinct won't be easy. Imagine convincing hundreds of families, all with different ages, financial situations and emotional ties to their homes, to mostly say yes. That is going to be tough. Worse, the process could lead to disagreements or even tension within the community, much like what we have seen in private en bloc disputes. Though, of course, if the vote fails or if your block isn't chosen, then nothing changes. You get to continue staying in your HDB until the lease runs out. Though, the government has also said that older flats will still be safe and livable with ongoing upgrading under programs like HIB 2. As of now, many of these details are still being worked out. The government has mentioned that it is developing the full VERS framework, with the first pilot expected to roll out in the early 2030s. So realistically, how is this all going to affect us? For years, homeowners saw SERS as a kind of lottery ticket, where even if a flat was getting old, there was always the hope that one day the government would come in, buy it back at market value, and hand you a brand new flat with a fresh 99-year lease. That belief shaped how some people bought properties too, where some buyers were willing to pay more for older resale flats, especially in mature or central estates like Tiong Bahru or Queenstown, with the hopes that their block might one day kena SERS. But now, under VERS, buyers will now have to think more seriously about lease decay, resale value, and whether they can live there comfortably for the long term, and not just whether the government will bail them out someday. In a way, VERS brings expectations back down to earth. It reminds Singaporeans that HDB flats come with 99-year leases, and that housing wealth should be built on good planning and not luck. But more importantly, over time, VERS could affect how the market values aging flats, because under VERS, 70 years now becomes the new psychological expiry date. For example, before, people thought of HDB lease in terms of 99 years, where as long as it is not expiring in my lifetime, I'm safe. But with VERS coming into play, homeowners and buyers will be thinking, how many years before my flat hits 70? Because that's the point where uncertainty begins. Like, will my block be chosen? Will my neighbors vote yes? How much will the compensation be? So all of a sudden, 70 years becomes the new point where the value of your flat may potentially start declining faster. Not just because of lease decay, but because of market psychology. Flats approaching 60 or 65 years might see demand slow down, as buyers hesitate to pay a premium for something that could face a collective vote or a forced move. While younger flats with 80 years or more left on the lease could command stronger premiums, because they are seen as safe zones with decades of stability before the worst kicks in. And that will influence everything from how buyers price resale flats to how homeowners plan their retirement, to even how we think about public housing altogether. Anyway, that's all for this video. Hope you found this useful. Like, share and subscribe, as I'll be posting new videos every week.